Look at first look at illustration to students. So here, what are the financial statements of sole proprietorship, trading account, profit and loss account, and balance sheet? You get a question from this chapter. First, prepare all the trading account format, profit and loss account format, and balance sheet format. After that, identify which item is recorded in which account. That's it. Simple. Okay. Now look at first one by one. Here they are giving information opening inventory. Now look at the requirement first. Required. From the above information, prepare a trading account of Messrs. ABC Traders for the year ended 31st March 2022 and pass necessary closing entries the journal proper of Messrs. ABC Traders. First, we prepare account to students. After that, you can prepare closing entries. Look at opening inventory, trading account, debit. Purchases, trading account, debit. Carriage inward, trading account, debit. Wages, trading account, debit. Sales, trading account, credit. Returns inward, sales returns na deduct from sales. Returns outward, purchase returns na deduct from purchases. Closing inventory, trading account, credit side. Over. Now, what is the entries we record? Closing entries means first, whatever the items we debited to the trading account, record the entry. Means trading account debit to opening inventory, to purchases, to carriage inward, to wages. This is the entry we record. Next step. Here we have purchase returns. Na purchase returns first adjust against purchases. For that, what is the entry we record? Purchase returns shows credit balance transfer. Purchase returns account debit to purchases. Next, sales inward transfer to sales account entry. Sales returns debit now. Now we are closing. So sales account debit to sales returns account. After that, record this entry. Over. Next, finally we have sales and closing inventory. What is the entry we record? Sales account credit. So sales account debit now. Closing inventory debit to trading account. This you get your trading account. So students, here this is a simple problem. The difference in trading account is nothing but gross profit. Transfer this gross profit to the profit and loss account. Simple. Now you can check it. Next, come to question number 3. Whatever the gross profit we have in P&L trading account, that is carried to the profit and loss account. Is it clear, students? Now look at question number 3. Revenue, expenses and gross profit balances. What they are giving? Revenue, expenses and gross profit balances of Messrs. ABC Traders for the year ended 31st March 2022 were as follows. They are giving gross profit means already they have prepared trading account. Okay, look at gross profit, trading account, credit. Salaries, sorry, gross profit, P&L account, credit. Salaries, profit and loss account, debit. Discount, credit they are giving now means discount received, so credit. Discount they are giving debit means discount allowed. It is discount received and it is discount allowed. P&L account debit. Next, bad debts debit. Depreciation debit. Legal charges debit. Consultancy fees debit. All expenses now. So in the P&L account, what we do? We write all indirect expenses. Here we write gross profit by other incomes. Difference is nothing but your profit and profit, net profit or net loss. This net profit or net loss is transferred to capital account. Yes or no? No. One. Audit fee, expense debit, electricity charges debit, telephone, postage and telegram debit, stationery debit, interest paid on loan debit, expense. After debiting all these expenses and creating all the incomes, now your P&L account looks like this. Don't forget to write this heading, student. It is very important. This very important heading. Okay, so don't commit any mistake in writing. This is our question number. Next one, closing entries for this. Simple. All the expenses transfer to P&L account. Entry, profit and loss account debit to expenses account. All the incomes transfer to P&L account. Entry, incomes account debit to profit and loss account. Now, this P&L account shows either gross profit or gross loss. Sorry, net profit or net loss. This is transferred to capital account. Get profit and loss account debit to net profit to capital. You can write combined entry for this. You can write combined entry. Next problem. Illustration 4, observe. This we have already discussed in important adjustments concept. Sir, no? Look at 1st April 2021, provision for doubtful debts 40,000, trade receivable 15 lakh, bad debts 1 lakh. So, what is the net amount of debtors? 14 lakh. Okay, already provision we have 40,000 na. So, provision account credit 40,000. Let us how much we have? 14 lakh. On 14 lakh, how much provision we have to create? 5%. 14 lakh into 5%, 70,000. This becomes closing balance in the provision account. Next, bad debts 1 lakh. Now, generally bad debts are transferred to P&L account. But here we are maintaining provision. So, transfer this 1 lakh to provision account. Entry, provision account debit to bad debts account. So, here bad debts 1. Now, the balance amount is nothing but difference is transferred to P&L account. True student. Next question. Illustration 5, look at. The following is the trial balance of C Vanshu on 31st March 2022. They are giving trial balance. Okay. Capital inventories. What's the requirement? Prepare closing entries for the above items and prepare trading and profit and loss account. First, you prepare trading and profit and loss account. After that, you can write closing entries. Okay. Look at. Capital is shown in the balance sheet. For this, there is no closing entry. Inventory on 1st April, trading account debit. Cash in hand, balance sheet, no closing entry. Stationery account, balance sheet, no closing entry. Purchases account, yes, trading account debit. For this closing entry we record. Wages, trading account debit. Salaries, profit and loss account debit. Discount allowed, profit and loss account debit. Discount received, profit and loss account credit. Sundry office expenses, debit to P&L account. Sales, credit to trading account. Sums owing by customers, means debtors. Debtors asset, balance sheet. Next, trade payable, sums owing to suppliers. Creditors, balance sheet. That's it, student. So, whatever the items you transfer to trading account, record the entry. Suppose opening stock, purchases, entry, trading account debit to opening stock account, purchases account, wages account, like that. Now transferring sales, sales account debit to trading account. Now here they are giving closing inventory. For closing inventory, what is the entry we record? Closing inventory account debit to trading account. Is it clear, students? First you prepare accounts, trading account, profit and loss. For that, entries. Now balance the trading account. What we get? We get gross profit or gross loss. For that, what is the entry? If it is gross profit, trading account debit to profit and loss account. If it is gross loss, profit and loss account debit to trading account. The profit and loss account we get either profit or loss. For that, what is the entry we record? If it is profit, that is transferred to capital account. Profit and loss account debit to capital account. If it is loss, then we deduct from capital. So capital account debit to profit and loss account. Here, next question. Now look at question number illustration 6. Given below trial balance of Mrs. Dayal Brothers as on 31st March 2022. They are giving trial balance and they are asking to prepare balance sheet. So we know how to prepare balance sheet. As it is a sole proprietor, we follow horizontal form of balance sheet. When it comes to company, we follow vertical form of balance sheet. Simple. Here we write liable. Sorry, just a minute. Capital, outside liabilities, assets. Sir, no. If the particular item given in the trial balance is asset, write down on the asset side. The particular item is outside liability, write down on the liability side. Look at, students. Capital, liability side. Land and building, asset, debit, asset side. 14% term loan, liability side. Loan from Messrs D and Co. We received loan now. So liability side. Trade receivable, asset side. Cash in hand, asset. Inventories in trade, asset. Closing stock. So furniture, asset. Trade payables, liability. Advances to supplier, asset, because it is showing debit balances. So asset. Next, net profit. Net profit is added to the capital. Now drawings. So how do present this? Look at, students. In the balance sheet, how much is capital we have here? Capital is 7 lakhs. To this add net profit 1 lakh. Then total amount of closing capital 8 lakhs. Out of this, deduct drawings 1000 over 7,40,000 is the closing capital. This is important aspect in balance sheet. So clear, students. So while preparing balance sheet, don't forget to write neat heading. Next one, illustration 7. The balance sheet of Topper on 1st April 2021 was as follows. Look at here, already they are giving balance sheet on 1st April 2021. This is nothing but opening balance sheet. Look at the assets and liabilities information. Trade payable, expenses payable, capital. These are outside liabilities. Okay. Next, plant and machinery asset, furniture, trade receivable, cash at bank. During 21-22, his profit and loss account revealed. During 21-22 means already they have prepared profit and loss account and they arrived at a net profit of 80,30,000. This was after allowing for the following. So while calculating this net profit, now they have considered these things. Rent received income. Already they have considered. Depreciation on plant and machinery and furniture. Already they considered depreciation. Provision for doubtful debts 5% of trade receivable on 31st March 2022. Okay, so already they considered all these things. And why they are giving like this, sir? Simple. Observe carefully. But while preparing the profit and loss account, he had forgotten to provide for outstanding expenses 1,80,000, prepaid insurance 20,000. Already they have calculated profit 18,30,000. But it is after considering the above items A, B, C. But before considering these things, so what we have to do? It is simple. Calculate revised profit. Calculate revised profit 18,30,000. Take 18,30,000. Because of outstanding liabilities, what happens? Our profit gets decreases. Because of prepaid insurance, what happens? Our profit gets increases. Here we get revised profit. Yes or no? Look at student. Revised profit is next one. His current assets and liabilities on 31st March 2022. They are giving closing date assets and liabilities. Inventories asset, trade receivable asset 20 lakhs, trade receivable 20 lakhs minus on this we have provided 5% provision na 20 lakhs minus how much provision we have provided 5%, so 1 lakh. Remaining provision we have to show outer column 19 lakh. Do remember, students. Next, cash asset, trade payable, liability. During the year he withdrew 6 lakhs for domestic use. Here what is the important calculation? Capital. Already opening capital how much we have? 50 lakh. Opening capital 50 lakh plus during the year we arrived a profit of 16 lakh 70. Total 6670 minus during the year he has withdrawn 6 lakhs. So 60 lakh 70,000 is capital. To get the problem, student. First you plan your working. 60 lakh 70,000 is capital. Outstanding expenses just now we have provided. Trade payables, meaning assets. Is it clear, students? And at the time of writing assets, don't forget to deduct depreciation provided. Is it clear? Get illustration 8. Balance sheet as at 31st March 2022 they are giving. Look at the dates. Mahindra and Sons capital. Cash in hand, cash at bank, trade receivable, inventory, machinery and equipment. Okay. From the above given balance sheet, prepare the relevant opening entry. They are asking opening entry. So on 1/4/2022, we open new set of books for the financial year 22-23. Yes or no, students? For the financial year 22-23, we open new books of accounts. Now, whatever the assets and liabilities and capital information we have in the balance sheet, that is taken as a opening entry to the next year books. How the opening entry is recorded? Simple. One by one asset account debit, like cash account debit, bank account debit. Don't write cash in hand account, cash at bank account. Cash account debit, bank account debit, trade receivable account debit, closing inventory account debit, plant machinery and equipment account debit. Total debit 25 lakh 60. 2. Write down first outside liabilities. Mahindra and Sons 5 lakh 60. Assets minus liabilities, nothing but capital. So 2 capital, 20 lakh. Dear students, this is the opening entry we record. Okay, next one. Look at illustration 9. The Mittal gives you the following trial balance and some other information. They are giving some trial balance and information. First look at trial balance and some information. What is the requirement? Prepare final accounts of Sri Mittal for the year ended 31st March 2022. Final accounts means trading account, profit and loss account, balance sheet. Some working. So some students see generally trading and P&L account can be prepared by combining. Or it is always better to prepare trading account separate and profit and loss account separate and balance sheet is separate student. So draw separate format. Okay. Now here they have given closing inventory 1 lakh. What is the important aspect in this problem? Means GST information. Clear? Now look at. So identify one by one item. Now identify appropriate place for this item. Either trading account or profit and loss account and balance sheet. Okay. First one capital. Balance sheet liability side. Purchases trading account debit credit. Sales trading account credit. Opening inventory trading account debit. Trade receivable balance sheet asset side. Trade payables balance sheet liability side. Next one 14% bank loan taken at the year end. See here they are clearly mentioning we have taken loan at the year end. Means on this loan of 2 lakhs you need not to calculate any interest. Here so 2 lakhs is liability balance sheet liability. Overdraft taken at year end is also liability. You need not to calculate any interest on overdraft. Salaries expense P&L account debit. Advertisement expense P&L account debit. Other expenses P&L account debit. Returns. See debit returns means sales returns. Deduct from sales. Returns credit means purchase returns. Deduct from purchases. Furniture. Asset debit. Building. Asset debit. Cash in hand. Asset debit. Now they are giving input GST and output IGST. Observe. Input CGST and output IGST. Here set of provisions we have to consider. Look at. See to adjust actually input CGST, input SGST we have to adjust against output CGST and output SGST. But here we don't have that liability na. So this input tax credit can be utilized for output IGST. Total IGST payable 15,000 whereas we have input 18,000. So we have excess input. We have excess input. So that we have to show in the balance sheet. This is simple. Trading account, profit and loss account and the balance sheet. So finally they have taken input SGST. Output how much? First CGST adjusted 9,000. Remaining amount we have 6,000 minus. Next IGST we have adjust 6,000. Remaining we have 3,000. 3,000 rupees asset. This is important aspect of this problem. Okay. As loan and overdraft taken at the year end so that there is no interest. Next look at illustration 10. Mr. Mohan gives you the following trial balance and some other information. Look at the trial balance here. Trial balance they have given. So this trial balance contains input and output GST. Very important. Suppose if you don't know how to adjust this input and output GST, then simply ignore this. Ignore these items. Remaining items you can write in the appropriate place. Remaining items you can write in the appropriate place. Na? So write it. Write it. The other information. Closing inventory was 1,80,000. Depreciation 10% per annum. Fine. Prepare trading and profit and loss account for the year ended 31st March 2022 and balance sheet of Mr. Mohan as on that date. Simple. So prepare a trading account, profit and loss account and balance sheet format first. Now here mark the adjustment. Closing inventory anyway we take it. Now depreciation we have furniture. Look at one by one item. Capital, liability, sales, trading account credit, purchases, debit, opening inventory, debit to trading account, freight inward, trading account debit, salaries, P&L account debit, other administrative expenses, P&L account debit, furniture. Asset now. See, on furniture, we have to provide 10% depreciation, 35,000 rupees. And this 35,000 rupees, don't forget to show the P&L account debit side. Remaining 3,15,000 balance sheet asset. 3,50,000 asset minus 10% depreciation, 35,000, remaining 3,50,000. So this is P&L account. Clear, students? Next one. Trade receivable, asset, balance sheet. Trade payable, liability, balance sheet, liability side. Returns, debit, sales returns, deduct from sales. Credit, purchase returns, deduct from purchases. Next, discount, debit, discount allowed, P&L account debit, credit, discount received, P&L account credit. Bad debts, simply transfer to P&L account debit because it is lost now. Next, investments in government securities, asset, balance sheet, asset side. Cash in hand, cash at bank, balance sheet, asset side. Now the important adjustment is input GST and output GST. Output GST means we have to pay. Input GST means already we have paid. And whatever the GST we have paid already, that is now adjusted against the output liability. First, here already I have given provisions. I have already recorded a video of important adjustments. So in those adjustments, I have given accounting treatment for this. You can have a look. Okay, students, or otherwise simply look at this working note. You can adjust. You can understand. See, this is output liability. Whereas input CGST we have 10,000 now. Out of 10,000, first adjust 8,000 rupees. How much remaining amount we have? 2,000. That can be adjusted against IGST. Next, SGST we have 10,000. How much output SGST we have? 8,000. First adjust against this. Remaining we have 2,000. That can be adjusted against IGST. So total IGST payable 6,000. Adjusted 4,000. Remaining 2,000 payable. Here you have two assumptions. One, this remaining 2,000 is paid. Means what is the entry we record? Output IGST account debit to bank account. So if you assume it is paid, then there is no liability of 2,000. On the other hand, your bank balance gets reduced by 2,000. Suppose if your assumption is not paid, your bank balance will not decrease, but liability 2,000 increase. So output IGST 2,000 rupees we show as a liability. Is important. Yes sir, no students. Illustration 11. The balance sheet of Mr. Popatlal, a merchant, on 31st March 2022 stood as below. See, do remember one thing. The final exams, you may not get this problem as it is. They merge various adjustments. They merge various adjustments and they give you a problem. Now students, next one. Okay, balance sheet. Okay, now they are giving opening a journal entry on 1st April. Simple. Look at what is the entry we got. Fixed assets account debit. Inventories debit 2,06,400. Trade receivable debit. Don't consider provision now. Cash account debit. All these assets are debit now. Now provision credit. 2 provision for doubtful debts account. Credit. 2 trade payables. Credit. 2 bank overdraft. Credit. 2 capital difference. That's it. Opening entry. Get illustration 12. Yes. Now question number 12. Look at question number 12. The following is the schedule of balances as on 31st March 2022 extracted from the books of Sri Gavaskar, who carries on business under the same name and style of Messrs. Gavaskar, Vishwanath and Co. at Mumbai. Okay, whatever it may be. Look at students. So they have given trial balance, right? After that, prepare trading and profit and loss account for the year ended 31st March 2022 and the balance sheet as at that date after making provision for the following. So they are asking us to prepare trading account, profit and loss account and balance sheet. They are giving some adjustments. Look at this first adjustment total regarding depreciation. So building used for business by 5%. 5% students, they are not mentioning time. Okay, that means per annum. Do remember. Furniture and fixtures by 10%. One steel table purchased during the year for 14,000 was sold for same price, but the sale proceeds were wrongly credited to sales account. This is important adjustment, students. Now what we have to do? 14,000 worth of asset we sold, but it is credited to sales account. Now we have to adjust from sales. So deduct 14,000 from sales. Add this 14,000 to what? Furniture sold na anyway. So ignore. Next, Office equipment by 15%. Purchase of typewriter. This is also some error. This is also error. So these errors, that means in the final accounts chapter, they may mix rectification of errors also. Okay. Now motor car by 20%. This first adjustment is important. Remaining everything simple, students. This is closing stock. Next 2 months rent for godown is outstanding. Here they are simply saying 2 months rent. Yes, but how much is 2 months rent? So for that you have to check trial in the trial balance rent. So here they are giving 2 months means, yeah, observe here. Yeah, rent of godown 55,000. In a year we have 12 months now. They are saying 2 months godown rent is outstanding. Means whatever the rent here they have given, that is for 10 months. That is for 10 months. So per month rent is how much? 5,000. 5,000 into 2, 10,000 rupees. Is it clear, students? Next one. Interest on loan from Vishwanath is payable at 12% per annum. This loan was taken on 1/5/2021. Means, look at the loan. We come one by one. Cash in hand, asset, cash at bank asset, balance sheet, sundry debtors, 8,60,000 rupees. Now, balance sheet now, if you have any provision, deduct. Stock on 1/4/2021. Opening stock, trading account debit. Furniture and fixtures, balance sheet asset after deduction of depreciation. Office equipment, asset, first deduct depreciation, show this depreciation into balance sheet. Sorry, P&L account. Building, asset, deduct depreciation. Motor car, asset, deduct depreciation. So it is better to calculate a separate working note for depreciation, students. Okay. Next, creditors. Liability, loan from Vishwanath, 3 lakhs. So this loan, actual liability, balance sheet liability side, but this loan was taken on what date? 1/4/2021. From 1/5/2021. From 1/5/2021 to books of accounts closing date 31/3/2022. How many months? 11 months. How many months? 11 months. So for 3 lakh, calculate 11 months interest, 11 by 12 at the rate of 12%. How much, students? 3 lakhs into 11 by 12 into 12 by 100. So it comes around 33,000. It comes around 33,000. Observe. But out of that, how much interest expenses they have given? Interest on loan from Vishwanath 27,000. Means 6,000 interest we have to pay. So in the P&L account, total we show 33,000 rupees interest and remaining 6,000 rupees balance sheet liabilities side. So here you can observe working note. Yeah, look at this is working note. Important. Now here they have given depreciation working note. Building, motor car, furniture and fixtures, and office equipment. Total depreciation P&L account debit. After deduction of depreciation, show the remaining balances asset side. Next one. Provision for bad debts is to be maintained at 5% debtors. Already we have sundry debtors now. On that, first calculate 5% provision. Now this provision P&L account debit side, deduct the same provision from sundry debtors and show it on the asset side of balance sheet. Insurance premium includes, this is important adjustment, students. Insurance premium include 40,000 paid towards proprietor's life insurance policy. Okay. Total insurance premium paid how much? Total insurance premium paid 55,000 rupees. So from 55,000, first you deduct 40,000 rupees insurance. Why? Because it is relating to partner's life. So the same 40,000 again add to the drawings. So 15,000 remaining. So 15,000 rupees is relating to business. The balance of the insurance charges cover the period from 1/4/21 to 30th/6/2022. Calculate number of months. So 1/4/2021 to 31st March 2022, 12 months plus 1/4/2022 to 30th/6/2022, 3 months. Total 15 months. So this insurance is covered for 15 months. Out of 15 months, 12 months relating to current year, 3 months relating to next year. So calculate prepaid insurance. Simple. 15,000 into 3 months is the prepaid, na? 3 by total months covered 15. So 3,000 is the prepaid insurance. This is shown on the asset side of balance sheet. In the P&L account, we show only 12,000 rupees. That is the important adjustment in this problem. Look at insurance. Next one, two important rectifications. First one is what? Sale of furniture, 14,000 deducted. Next, typewriter included in the purchases, that is also deducted. These two important rectifications you try to focus. So next question, illustration 13. Crimson Traders profit and loss account for the year ended 31st March 22 includes the following information. Okay, so already we have prepared profit and loss account. This profit and loss account contains this information. Student, observe. First one, depreciation, bad debts written off, increase in provision, retained profit for the year, liability for tax. Okay, state which one of the items 1 to 6 above transfer to provision, transfer to reserve, and neither related to provision nor reserves. Generally, provision we create for future losses or future liabilities. Reserve we create for future purpose, for specific purpose, or for maybe for business expansion, or some general reserve, or generally we create dividend equalization reserve, like that, students. Okay, first depreciation related to provision, student. Okay, next one, bad debts written off. Bad debts written off, it is neither provision nor reserve. Why? Because already bad debts written off. What is the entry we record? Bad debts account debit to debtors account. Next, increase in provision, yes, it is provision. Retained profit for the year, it is related to reserve. Next, liability for tax, it is related to provision. This is simple question, students. Next one, here they have given a table consist of various important adjustments, students. So just go through these adjustments. Second one, neither reserve nor provision. Next, look at next question. Yeah, that's it. Now we see, yes, practical questions. From the following particulars extracted from the books of Ganguly, prepare trading and profit and loss account and a balance sheet on 31st March 2022 after making the necessary adjustments. Fine. So first, prepare all the required accounts: trading account, P&L account, and balance sheet. Look at Ganguly capital opening, balance sheet liability side, stock, profit and trading account debit, sales, trading account credit, returns, deduct from sales. Purchases, trading account debit, purchase returns, deduct from purchases, carriage inward, trading account debit, rent, P&L account debit, salaries, P&L account debit, sundry debtors, balance sheet asset, sundry creditors, balance sheet liability, loan from Dena Bank, 1 lakh. Here they are giving loan now. When you identify like this, means loan they are giving, in the bracket they are saying 12%, means it is rate of interest. Loan 1 lakh, balance sheet liability side, rate of interest, calculate. So you see the further information. Do you have any further information or not? Yes, we check it. Next one, interest paid. Okay, printing and stationery, interest paid, P&L account debit, printing and stationery, P&L account debit, advertisement also P&L account debit. Interest received, P&L account credit, cash with the Traders Bank Limited, asset na, cash at bank, balance sheet asset. Discount received, profit and loss account credit. Investments at 5% as on 1/4/2021. Investment is asset 25,000. In the bracket they are giving, that is nothing but interest on investment. Interest on investments. So when you get the information like this, first calculate how much, and they are giving the date also 1/4/2021. So here observe, investments in the brackets they are giving at 5% as on 1/4/2021. How much of investments we have, students? 25,000. Now don't forget to calculate interest on these 25,000 investments at 5%. Okay, next, furniture they are giving 1/4/2021 9,000. Discount allowed, furniture asset now. So date they are giving and amount also they are giving, that means you have to calculate depreciation. Next one, discount allowed, profit and loss account debit, general expenses, profit and loss account debit, audit fee, P&L debit, fire insurance premium debit, traveling expenses debit, postage and telegram P&L debit, cash in hand, balance sheet asset, Now they are giving deposit at 10% as on 1/4/2021. Deposit at 10% as on 1/4/2021. Asset, so balance sheet, that side. Next, drawings, deduct from capital. Now look at one by one adjustment. Value of stock on 31st March 2022 is 3,93,000. This includes goods returned by customers on 31st March 2022 to the value of 15,000 for which no entry has been passed in the books. Means this is sales returns, na? So there is no entry for this. Now we record entry. Entry. Sales returns account debit to debtors account. Because of this, what is the effect, students? Sales returns account balance increase, debtors account balance decrease. Okay, next one. Purchases include furniture purchased on 1st January 2022 for 10,000. Look at the furniture. Yeah, furniture as on 1/4/2021. Here what they are giving, purchases include furniture purchased on 1st January. So look at purchases. 12,15,500. This 12,15,500 includes 10,000 rupees furniture. Means out of 12,15,500, you first deduct 10,000 rupees. Remaining amount to show it in the trading account debit side. Now this 10,000 rupees add to furniture. Already here we have furniture na 1/4/2021. On this you have to calculate depreciation for full year, but for this 10,000 you have to calculate depreciation for 3 months. This is important adjustment. Next, depreciation should be provided on furniture at 10% per annum. 9,000 for full year, for 10,000 only 3 months. Next one, the loan account from Dena Bank in the books of Ganguly appears as follows. Here, how much loan account balance is showing in the trial balance? 1 lakh. But how this 1 lakh arrived? Look at. See the observe the dates here. 1/4/2021 year beginning, 31/3/2022 year ending, 31/3/2022 year ending. Okay. Generally loan account shows which balance? Credit balance 50,000. Okay. So it means on 50,000 rupees we have to calculate interest for full year at a 12%. Means how much? 6,000. 50,000 into 12%, 6,000. Next one, by bank. By bank means we have borrowed loan 50,000 rupees at the end of the year. That means on this 50,000 there is no interest. But what is the outstanding amount? 55,000. 55,000 is the outstanding amount. Sorry, 50 plus 50, 1 lakh is the outstanding amount. Is it clear, students? Yes. Now, but here, observe. Next, sundry debtors include 20,000 due from Robert and sundry creditors include 10,000 due to him. Actually, from Robert we have to receive 20,000. He is our debtor. He is our debtor. Asset na. But to the same person we have to pay 10,000 rupees. Means to Robert I have to pay 10,000. Instead of showing like this, what I can do is simply from 10,000 rupees I will deduct 10,000. Sorry, simply from 20,000 rupees I will deduct 10,000. Remaining 10,000 rupees I will show on the other hand. Is it clear? The same adjustment we have to do it now. What? Debtors include 20,000 na. So out of 20,000, sorry, out of the debtors amount, deduct 10,000. Out of debtors, deduct 10,000 only. Here, that is important adjustment. This 10,000 is deducted before providing provision for doubtful debts. I repeat, this 10,000 rupees is deducted before providing provision for doubtful debts. That is important. Interest paid include 3,000 paid to Dena Bank. Generally, total what is the interest paid? 4,500 as per trial balance. As per trial balance, what is interest paid, students? 4,500. But we have calculated interest payable to Dena Bank, that is 6,000. Out of 6,000, already paid how much? 3,000. What is the remaining interest payable? Still 3,000 rupees. It is liability for us. It is liability for us. So, in the P&L account, total 4,500 already paid na, outstanding 3,000. Total 7,500 P&L account debit. In the balance sheet, 300 liability. Here, next one. Interest received represents 1,000 from sundry debtors due to delay on their part and the balance on investments and deposits. Next important calculation in this problem is nothing but, observe, on investments how much interest you have to receive. 25,000 into 5% for full year, 1250. Next, here we have deposits 1,50,000 rupees from beginning. So on this we will pay 10%. So 15,000. 1250, 10,000. Total 16,250. But interest received how much? Interest received. You get interest received 7,250. Interest received 7,250. So total interest is 16,250. But interest received 7,250. Out of these 1,000 rupees from debtors and 6,250 rupees from, right, 6,250 from deposits and investments. Understood, students? So total interest 16,250, received only 6,250, remaining receivable 10,000. We have to do it. So in the P&L account, total interest shown 16,250 plus 1,000 rupees from debtors, 17,250. Is it clear? 10,000 interest receivable, balance sheet asset. Next adjustment. Provide for interest payable to Dena Bank and interest receivable, already we calculated. Make a provision for doubtful debts at 5% on balance sundry debtors. No such provision need to be made for deposits. Clear. Now observe, what is our debtors total? Debtors are 1,20,000 students. Debtors are 1,20,000. From this, 15,000 amount is sundry sales returns. So 1,05,000. Remaining amount 1,05,000. Out of them, debtors include creditor also. So deduct 10,000. What is the remaining amount, student? 95,000. On that, calculate 5% provision. This is regarding debtors adjustment. Important. So in this problem, we have three very important adjustment. Very important adjustment. Is it clear? So go through the problem once again. Second problem. Sen Gupta and Co employs a team of 8 workers who were paid 30,000 per month each in the year ending 31st March 2021. We have total how many workers? 8 workers. Each employee will get 30,000 rupees per month. Means per month total wages payable. Means salary payable how much? 2,40,000 per month. Because 8 months, 8 employees into 30,000 per month. Okay. At the start of financial year 21-22, the company raised salaries by 10% to 33,000 per month. Now, from the financial year 21-22, what is the salary of each employee? 33,000 rupees. So 8 employees. 8 employees into 33,000. 2,64,000. Is it clear? Per month, now salaries increased to 2,64,000. Next, October 1st, 2021, the company hired 2 trainees at a salary of 21,000 per month each. The workforce, now already we have 8 employees. They again hired 2 employees. What is the salary to them? 21,000. What is the salary of 8 employees? 33,000. Next, are paid salary on the first working day of every month. What is the meaning of this? 1 month salary, suppose 1st April to 30th April. This is month beginning and month ending. Generally, salaries are paid at the end of each month. Generally, salaries paid at the end of each month. Why? Because salaries accrued and paid. But some organization will pay this month salary, April month salary, in the month of May. Maybe first or second or third or maybe within 1 week. So 1 month salary is paid in the next month. The same manner, here also they are paying the next day of the month. 1 month salary they are paying in the next day of the month. Okay, at the end of 31st March, if you see at the end of 31st March every year, 1 month salaries are outstanding. 1 month salaries are outstanding. So 1 month in arrears. So that the employees receive their salary for January on the first working day of February. Okay. You are required to calculate amount of salaries which would be charged to the profit and loss account for the year ended 31st March 2022. See, generally profit and loss account is prepared by following accrual concept. Accrual concept means salary paid plus payable. Salary paid plus payable. Now calculate how much salary is paid total. 8 employees into each employee's salary 33,000 into, you have to show in the P&L account na, into 12 months. Generally for the year for the year 21-22 we pay 8 months. We paid 11 months salary to the employee and 1 month in arrear. The P&L account we show total amount. So plus 2 employees into 21,000 into 12 months. Tell me, 8 into 33,000 into 12, 3168 plus 2 into 21,000 into 2. Sorry, 12 na? 2 into 21,000 into 12. 5 lakhs. 4,000. Total 36 lakhs 70. This is the total salaries payable for the year 22. Okay, or to be shown in the P&L account. Next, amount out actually paid as salaries during 21-22. Amount actually paid as salaries during 21-20. During 21-22 means how much of amount you pay as salary. Means 11 months for the current year, 11 months for the current year, and 1 month arrears of second previous year, 1 month arrears of previous year. So previous year arrears are 2 lakh 40, 2 lakh 40 plus current year 8 employees 33,000 into 11 months we paid 29 lakh 4,000 plus 2 trainees we have recruited from 1st October. So October, November, December, January, February, March, 6 months, but we pay only 5 months salary na? Why? Because 1 month salary we pay in the next month. So 21,000 into 2 trainees into 5 months, 2 lakh 10,000. Add this, you get the second answer. Next one, outstanding salaries as on 31st March 2022 means 1 month salary in arrears na. So 8 employees into 33,000 1 month, 2,64,000 plus 21,000 into 2 employees, 42,000. This total is the arrears amount. Clear students? Next one. You are required to prepare a trading and profit and loss account for the year ended 31st March 2022 and a balance sheet as on that date from trial balance given below. Simple. Here they are giving debit balances. Observe. Trade receivable, balance sheet asset, inventory, trading account debit, cash in hand, balance sheet asset, wages, trading account debit, bad debts, P&L account debit, furniture and fixtures, balance sheet asset, depreciation, P&L account debit, salaries debit, purchases, trading account debit, plant and machinery, balance sheet asset, trade balances, capital, balance sheet liability, trade payable, balance sheet liability, sales, trading account credit, inventory, 10 lakhs, trading account credit, balance sheet asset. Is it clear, students? Completed. Next one. Mr. Kotriwal is engaged in business of selling magazines. See, these type of problems now, sometimes, occasionally they give the exams. Like this problem and the salary calculation problem. Is it clear, students? Next one. So don't leave these problems. Mr. Kotriwal engaged in business of selling magazines. Several of his customers pay money in advance for subscribing his magazines. That means some advance money we receive. Information related to the year 31st March 2022 has been given below. Fine. 1 for 2021, he had a balance of 2 lakh advance from customer's account. Suppose if I prepare this advance from customer's account, Shows credit balance na, so 2 lakhs. It is showing 2 lakhs, okay. Of which 1,50,000 is related to 21-22 for the current year, okay. While remaining pertains to the year 22-23, fine. During the year 21-22, here dates are very important. He made cash sales of 5 lakhs, total cash sales 5 lakhs. You are required to compute total income for the year 21-22. Total income means 5 lakhs he made cash sales, and relating to current year already 1,50,000 rupees, 1,50,000 rupees cash we received already in the previous year. So total income for the current year is nothing but 6,50,000. Total income for the current year is nothing but 6,50,000. Next one. Total money received during the year if the closing balance in advance from customer's account is 1,70,000. Means they are asking how much cash he received during the year. Means already he received 5 lakhs. Na? Already cash he received 5 lakhs, and they are saying advance from customer account balance is 1,70,000. Look at, means this account debit balance 1,70,000. 1,50,000 is relating to 1,50,000 is relating to current year, na, that we adjust. And out of 1,70,000 already they said opening balance 2 lakhs, opening balance 2 lakhs. Out of these 2 lakhs, 1,50,000 relating to current year, 50,000 relating to previous year. Now what is the outstanding balance? 1,70,000. Already out of this 50,000 received in the previous year, na, last year. So what is the amount we received in the current year as advance? 1,20,000. So 5 lakhs we received in the form of sales, 1,20,000 we received in the form of advance. So total cash received 6,20,000 students. Okay. Next one. Fifth one. Mr. Birla is a proprietor engaged in the business of trading electronics, and excerpts from his trading and profit and loss account is given. Okay. This problem is very logical, students. Logical. Observe. Here already they have prepared trading and profit and loss account. Here they are giving some missing amounts. Those missing amounts you have to identify. Here if you observe there, you find some alphabets. You find some alphabets. So it is a hint in the problem. It is a hint in the problem. Means you follow these alphabets. That means first you calculate A, then you get B, after that you get C, after that you get D. This is the hint in the problem. You get first trading account, sales minus COGS, we get what? Gross profit. The same gross profit is carried to the P&L account. And miscellaneous income, fine. Debit, rent 26 lakh, office expenses 13 lakh, selling expenses, okay, we have to calculate. Commission to manager, okay, commission is charged at the rate of 10% and selling expenses amounted to 1%. Now look at, so first you need to calculate net profit. To calculate net profit, what is the hint you have? So manager commission and rate of commission. Here manager commission is paid on two bases. One, commission before charging manager commission, such commission, or commission as a percentage of, commission as a percentage of net profit after charging manager commission. So here first look at, it is before, on net profit before charging manager commission, nothing but what is the formula for this? Commission is equal to net profit before manager commission into rate by 100. Yes or no? Here commission is given is equal to, this is not given, let us say this is x, and rate is given 10 by 100. Okay, now how much? Simply 2 lakhs into 100 by 10. It is simply 20 lakhs. 20 lakhs is what? 20 lakhs is net profit before manager commission. 20 lakhs is net profit before manager commission. Now, deduct commission. 2 lakhs now. So, what is your net profit? 18 lakh. This is answer A, 18 lakh. Okay, now look at. So, here I am writing 18 lakh. In the place of A, I am writing 18 lakh. Is it clear, students? Now, if you observe, credit side total is given. Credit side total and debit side total both are equal. Here we have debit side all information except selling expenses. Nothing but Total 60 lakhs minus deduct all expenses on the debit side now. 26 lakhs minus 13 lakh minus 2 lakhs minus 18 lakh profit. So here B you will get 1 lakh students. B you will get 1 lakh selling expenses deduct. After getting B you can calculate sales. Sales, see, selling expenses are 1% of total sales. Selling expenses are sales into 1 by 100. Nothing but sales is equal to selling expenses into 100. Means 1 lakh into 100, that is equal to 1 CR. That is equal to 1 CR. Yes or no? Sales are 1 CR. Observe. 1 crore is your sales. 1 crore is your sales. COGS is 45 lakh. Remaining 55 lakh is what? Gross profit. Same gross profit is carried here. 55 lakh. Total credit 60. Gross profit 55. Miscellaneous expenses 5 lakh. That's it. Your problem completed. Clear, students? So these are the problems on final accounts of non-manufacturing concern. Now we see problems on manufacturing concern. Problems on manufacturing concern. Observe, students. Now look at final accounts of manufacturing concern, student. The only difference between non-manufacturing concern and manufacturing concern is manufacturing concern will produce the goods and sell them. Non-manufacturing concerns will directly purchase the goods from manufacturer or wholesaler and he will sell the goods. So the final financial statements or final accounts of a manufacturing concern is nothing but one is manufacturing account, trading account, profit and loss account, balance sheet. So the main difference between manufacturing and non-manufacturing is nothing but manufacturing account. So what is the purpose of preparing manufacturing account? To know the cost of goods produced. To know the cost of goods produced. Yes or no, students? For that we prepare manufacturing account. Observe. Look at illustration 1. 1 lakh units were produced in a factory. Per unit material cost. See what are the elements of cost? Tell me. Material cost, labor cost and expenses. Material can be classified into direct material, indirect material, direct labor, indirect labor, direct expense, indirect expense. All direct components can be called as prime cost and all indirect components are called as overheads. Overheads can be again classified into, we can classify into production overheads, administrative overheads and distribution overheads, administrative overheads and selling and distribution overheads. In the manufacturing account we consider prime cost plus production overhead or manufacturing overhead. These two things we consider in the manufacturing account. Observe. So to produce a product, we need 10 rupees material per unit, labor 5 rupees. That apart, it was agreed to pay royalty 3 rupees. Okay, to the Japanese collaborator who supplied the technology. Calculate manufacturing costs. Simple. First, calculate prime cost plus production overhead. Here, prime cost is nothing but direct material, direct labor, direct expenses. 10 rupees plus 5 rupees plus 3 rupees. What is the total prime cost we have to pay? 18 lakh. Here, they didn't give any production overheads. How many units we are going to produce? 1 lakh. So, total manufacturing cost is 18 lakh. Simple, students. Next one. Here you can observe manufacturing account. Look at next illustration 2. Mr. Vimal runs a factory which produces soaps. Following details were available with respect to in respect of his manufacturing activities for the year ended 31st March 2022. First, they are giving opening work in progress. So opening work in progress 16,000, closing work in progress 20,000 credit. Yes or no? Next, opening inventory of raw material 1 lakh 70, closing inventory of raw material 1 lakh 90 minus purchases 8 lakh 20 less. What do you get? Raw material consumed during the year. So calculate it. Next, higher charges of machine 0.60 per unit manufactured. So how many units manufactured? They have given the below. 5 lakhs units manufactured. So 5 lakhs into 60 paisa. 5 lakhs into 60 paisa, 3 lakhs. So 3 lakhs is our direct expense. Next, higher charges of factory. This is also treated as expense. This is also treated as expense. Debit to manufacturing account. Debit to manufacturing account. Next one, direct wages calculation important here. Direct wages contracted 80 per unit manufactured and 40 per unit of closing work in progress. See how many units manufactured? 5 lakhs into 80 paisa, so 4 lakhs plus how many units closing? 12,000 units na. So 12,000 into 40 paisa, 12,000 into zero point 0.4, 4,800. So 4 lakh 4,800 is your direct wages. Next, repairs and maintenance also debit to manufacturing account. Over. Clear students? This is your manufacturing account. 1. Illustration 3. On 31st March 2022, trial balance of Mr. White were as follows. You get one by one. Stock on 1st April 2021. From a manufacturer point of view, stock means opening raw material, work in progress, and finished goods. These three consist of stock, or to put it simple, inventory. So, opening raw material, work in progress, finished goods. Raw material considered in raw material consumed during the year, work in progress. Debit to manufacturing account, finished goods. Debit to trading account. Sundry debtors, balance sheet, carriage on purchase, carriage on purchases. Where do we show manufacturing account? Debit side. Bills receivable, balance sheet asset, wages, manufacturing account debit, salaries, P&L account debit, telephone and postage, P&L account debit, repairs to office furniture, P&L account debit, cash at bank, balance sheet, office furniture, balance sheet, repairs to plant. See, where do we use this plant? In the production process. So whatever the expenses we incurred regarding production process, we have to debit to the manufacturing account. So this repairs also shown on the debit side of manufacturing account. Purchases considered in raw material consumed calculation. Plant and machinery asset balance sheet, asset side. Rent 6,000, lighting 1350, general expenses 1500. Regarding rent and lighting, we have little bit of adjustment. Thereafter we see general expenses, P&L account debit. Now credit side, sundry creditors, liability balance sheet, bills payable, liability balance sheet, sale of scrap. So this is credited. This is shown as a credit to the manufacturing account. Next one, commission received, P&L account credit, provision for doubtful debts, open provision for doubtful debts account, better, capital account, balance sheet, liability side, first item, sales, trading account, credit side, trading account, credit side, okay, bank overdraft, balance sheet, liability side, over. Now look at the adjustment. The following additional information is available. Stock on 31st March 2022, closing stock. So raw material. So closing stock of raw material is considered in raw material consumption calculation. Finished goods. Trading account credit side, at the same time balance sheet asset. Semi finished goods. Credit side of manufacturing account. Now do remember the whole stock on 31st March 2022 is shown on the assets side of balance sheet. Next, salaries and wages unpaid for March 22 were respectively 900, 2000. See, 900, 2000 added to salary and wages respectively, and the same both shown on the liability side of balance sheet. Next one, machinery is to be depreciated by 10% and office furniture by 7.5%. Depreciation on machinery 10% is shown on the debit side of manufacturing account. Don't forget, this is important. By mistake, some students will debit this depreciation on machinery to the P&L. No, machinery is used in the production process. So this is shown on the debit side of machinery account. Sorry, manufacturing account. Office furniture as usual, P&L account debit. Provision for doubtful debts is to be maintained at 1% of sales. If you observe, generally this provision is maintained on the debtors, but here they said provision is maintained on sales. What is our sales here? 1,67,200 into 1%, so 1672 rupees provision we have to maintain. But already how much provision they are maintaining? 1650. That means they are maintaining 1622 rupees short provision. So this 22 rupees is debited to P&L account, and in the balance sheet from debtors we deduct 1672 rupees. Next one, office premises occupy one-fourth total area, means this is utilized for distribution of rent. If you observe, rent is 6,000, one-fourth office, that means remaining three-fourth is factory. So three-fourth rent, manufacturing account debit, 1/4 rent, P&L account debit. Next one, lighting is to be charged as to 2/3 to factory and 1/3 to office. Already they are giving lighting charges how much? 1350. Out of that, 2/3 factory means manufacturing account debit, 1/3 P&L account debit. Over. Prepare manufacturing account, trading account, profit and loss account, and balance sheet. That's it. Right. Is it clear? So just go through the problem once. Next one, yeah. To get practical question, student. Mr. Pankaj runs a factory which produces motor spares of export quality. Okay. The following details were obtained about his manufacturing expenses for the year. Observe. Work in progress. Opening, closing. Opening manufacturing account debit. Closing manufacturing account credit. Raw material purchases. Opening, closing, return. Use these four information and calculate raw material consumed during the year. Next, indirect material P&L account debit. Sorry, indirect material na considered under production overhead. Because first we have to write prime cost. After that, production overhead. Next, wages, prime cost, indirect wages, production overhead. Okay, both are debited to manufacturing account. But first we have to write prime cost. PC means prime cost. Next, royalty on production, direct expense, remaining repairs, depreciation on factory shed, depreciation on plant and machinery, production overheads. Look at 1, 2, 3. These three are considered as production overheads. Next one, buy product at selling price, manufacturing account, credit side. That's it. Simple. Now look at next one. Following are the manufacturing account, creditors account, trading account provided by Mr. Shivi related to 21-22. Already they have prepared manufacturing account, creditors account and a trading account. There are certain figures missing from these accounts. Okay, fine. Look at this is raw material account, creditors and manufacturing account. They have given some additional information. Okay, what happened here? Observe. Raw material account, opening stock 1 lakh. Okay, raw material consumed, no. Closing stock, no. Creditors, no. Okay, we find creditors. Closing balance is given. Sorry, opening balance is given. During the year, we have paid 22 lakhs. Closing 6 lakhs means difference is nothing but 28 lakhs minus 15 lakh. Difference is nothing but goods purchased, na? Okay, fine. Observe manufacturing account, raw material consumed not given. Trading account 17 lakh 94,000. 17 lakh 94,000 is nothing but total cost incurred on production of goods. Okay, wages, depreciation, direct expenses. Fine. Additional information look at purchase of machinery worth 10 lakh has been omitted. We have purchased a machinery. Okay, how much worth? 10 lakh. It is omitted. Okay, machinery or dischargeable at a rate of 10% means 10 lakhs into 10%. Now the depreciation becomes 3 lakhs, no? So the revised depreciation becomes 3 lakhs. Yes or no? Next one, wages include the following. So this 3 lakh 50,000 includes what? Paid to factory workers, paid to labor at office. Means from 3 lakhs, sorry, from 3.5 lakh. Now we revise this to 3 lakhs. 3 lakhs because labor at office means P&L account debit. Next one, direct expenses include the following. So total 2 lakh 44,000 includes what? Electricity charges 80,000, office 30% pertaining to office. Means out of 2 lakh 44,000, how much amount we deduct? 80,000 into 30%. Because 24,000 rupees relating to office na minus. By mistake, they have shown in the manufacturing account. Next, fuel charges, freight inward, delivery charges to customer. This is also not considered. So 20,000. 20,000. So total amount, how much we deduct? 2 lakh 44,000 minus 44,000 we reduce. So finally we show 2 lakhs. Is it clear, students? Now we prepare revised manufacturing account. Observe carefully. A minute. Yeah, this is first revised manufacturing account. How much? Wages 3 lakhs revised amount. Depreciation earlier 2 lakhs plus 1 lakh increase. Direct expenses 2 lakhs. Okay. Now this amount how we got? Simple, students. First look at creditors account. So how much credit purchases? 13 lakh. How much credit purchases? 13 lakh. This 13 lakh is shown on the debit side of 13 lakhs is taken to the debit side of raw material account. So 13 plus 1, 14 lakhs. 14 lakhs. Now, what is your closing stock? What is your closing stock? That we need to just a minute. That we need to calculate. Observe. Yeah, raw material account it is. Creditors already we calculated. So 1 lakh plus 4 lakhs. Closing stock. Observe closing stock calculation. Since purchase of machinery, what okay, this is fine. Over. Wages also completed. 4 also completed. Now, revised balance to be transferred to trading account. Look at current transferred how much? 17 lakh 94. Depreciation increases na. So our cost also increases. Wages decreases na. Our cost decreases. Expenses also decrease na. So our cost decreases. What is the revised cost? 18 lakh. What is the revised cost here? 18 lakh. Now, 18 lakh credit minus 3 lakh, 3 lakh, 2 lakh debit. Difference is nothing but 10 lakh. And this 10 lakh is nothing but raw material consumed during the year. Go to raw material account, credit side raw material consumed. Debit 1 lakh plus 13 lakh, credit 10 lakhs. Difference nothing but 4 lakhs closing stock. This is this problem. Next one. Next problem and last problem. Look at what's the requirement? Manufacturing account. Same students. Very simple problem. The following is the trial balance of Mr. Pandit for the year ended 31st March 2022. Observe. Opening stock. Raw material, finished goods. Okay. Raw material, manufacturing account debit side, finished goods trading account debit side. Purchase of raw material 1 lakh 50 plus 5 lakhs. Land and building balance sheet asset, loose tools balance sheet asset, plant and machinery balance sheet asset, investments asset, cash in hand asset, cash at bank asset, furniture and fixtures asset, bills receivable asset, sundry debtors asset, drawings deduct from capital, salaries P&L account debit, coal and fuel taken to the manufacturing account, factory rent and rates taken to the manufacturing account, general expenses P&L account debit, advertisement P&L account debit, sales return deduct from sales, bad debts debit to P&L, direct wages factory manufacturing account, power manufacturing account, interest paid P&L account debit, discount allowed P&L account debit, sundry creditors balance sheet asset, purchase returns deduct from purchases. See 1 lakh 50 plus 5 lakhs plus 5,000. Sorry, minus 5,000. Capital, balance sheet liability, bills payable, balance sheet liability, long term loan, liability, provision for bad and doubtful debts. So it is better to open account. Sales, 8 lakh 50, trading account, credit, bank overdraft, balance sheet, liability. Now see the adjustment. Yeah. Carriage inward, manufacturing account, debit. Carriage outward means amount paid on sales. Okay, to deliver the goods to the customers. So P&L account debit, commission paid P&L account debit. Is this clear? Now look at additional information. Stock of finished goods at the end of the year 1 lakh. Stock of finished goods. So trading account credit side. A provision for doubtful debts is to be created. Provision for doubtful debts is to be created 5% on sundry debtors. Already you know this adjustment. Depreciation on building 1,000 and 3,000 on plant and machinery. Depreciation on plant and machinery, don't forget to take it to the manufacturing account. Don't forget. Next one. Accrued commission of 12,500 is to be received for the year. So asset na credit. Already commission received how much? Did we receive any commission? No. So credit this. And show balance sheet asset. Interest has accrued on investment 15,000. Did we receive any interest till now? No. So P&L account credit side and balance sheet asset simply salary outstanding 2000. So add to the salaries already paid and balance sheet liability side prepaid interest means deduct this 1500 rupees from already interest paid. Whatever the interest paid from that you deduct 1500. Now again show it in the balance sheet asset side. You are required to prepare manufacturing account, trading account and profit and loss account for the year ended 31st March 2022. Is it clear students? Yes. So just go through the problems once again. Here. So this is our financial statements of sole proprietorship, manufacturing, non-manufacturing. Is it clear students? So out of manufacturing or non-manufacturing, we may get one problem. Is it clear? Our next chapter is accounts from incomplete records. In this chapter, we calculate profit or loss of the business by following two methods of students. One is statement of affairs method, another one is conversion method. Under statement of affairs method, we simply calculate opening capital and closing capital. By comparing this opening capital and closing capital, we calculate the profit. At the same time, under conversion method, we first convert the incomplete information into complete information. After that, we calculate the profit or loss. Is it clear, students? Yes. So, the problems under this chapter is very logical problems, students, so that you have to be little bit careful. Now, look at first problem. Before that, under statement of affairs method, how do we calculate profit? Let us check. First one, capital at the end. We take capital at the end. This can be calculated by preparing closing statement of affairs. To that we add drawings, we deduct fresh capital introduced. From that, we also deduct the opening capital at the beginning of the year. Opening capital at the beginning of the year can be calculated by preparing opening statement of affairs. The difference is nothing but profit. Clear, students? Now look at. Raju does not maintain proper records of his business. However, he provides the following information. So here we have opening capital, closing capital. Fine. Drawings during the year and capital added during the year. Simply, how can we calculate 12,500 plus drawings minus additional capital 3,750 minus opening capital. So now this calculation is nothing but your profit, students. Look at, yeah, this one. Is it clear? The same can also be presented in an account format, that is nothing but capital account. If you prepare the capital account of the proprietor, then you can calculate profit or loss. The balancing figure in the capital account is nothing but your profit or loss. You can check it once. Next one, see the statement of affairs format, students. The statement of affairs is looks like balance sheet, but we should not call it as balance sheet, but we follow the same. To get on the right hand side, we write all assets. On the left hand side, we write all liabilities, and difference is nothing but capital. You know the accounting equation, assets minus liabilities is equal to capital. Accounting equation, assets minus liabilities is equal to capital. Clear? Now look at illustration 2. Rakesh started his business on 1st April 2021. He invested a capital of 1 lakh. On 31st March 2022, he has the following information available as per the single entry maintained by him. Single entry system maintained by him. This 1 lakh is nothing but opening capital, students. This 1 lakh is nothing but opening capital. Now look at cash balance. We have counted the cash balance 3,200. Inventory, this is also physically verified. We have 34,800. Receivable from Ajay against credit sales 31,000, nothing but debtors. So here you can prepare balance sheet easily. The cash 3,200 asset, not balance sheet, statement of as on 31st 3 2022. Look at receivable, yeah, inventory asset na 34,800, receivable 31,000, machine 85,000, payable to Vinod towards credit purchase 12,000, means liability. The difference is nothing but your capital, closing capital. This closing capital is compared with the opening capital. Yes or no, students? Okay. And loan taken from bank. Yeah, here we have more liabilities. 10,000 loan taken from bank. Drawings made during the year. This we take under profit calculation. Is it clear? So you are required to calculate the profit or loss earned by Rakesh for the year ended. First calculate statement of affairs here. Okay. Closing capital is 1,32,000. Closing capital is compared with the opening capital. Closing capital 1,32,000. Drawings made during the year 24,000. Add total 1,56,000. Opening capital 1 lakh. Difference is nothing but your profit. Is it clear, students? Next one. Illustration 3. Assets and liabilities of Mr. X as on 31st March 2021 and 31st March 2022 are as follows. Fine. Here they have given assets, but here some missing amounts are given. Building, furniture, inventory, sundry debtors, cash at bank, cash in hand, liabilities, loan, sundry creditors. So whatever the information available with you, we should prepare statement of affairs. Next one. Decided to depreciate building by 2.5%. Means at the end of the year, 1 lakh minus 2.5% depreciation. So that here we get 97,500 building value. 97,500 building value. Furniture we have 50,000 rupees. So what is the depreciation on furniture? 10% per annum. So that simply 5,000 is the depreciation. So remaining furniture value 45,000. Now we consider all these assets and liabilities in the statement of affairs. So here we have to prepare opening statement of affairs, at the same time closing statement of affairs. Look at students. Excuse me. Apart from that, they have also given some more information, that is one life insurance policy of the proprietor was matured during the period and the amount 40,000 is retained in the business. 40,000 is retained in the business. Proprietor took 2,000 rupees per month for meeting family expenses. Means this 40,000 is nothing but additional capital, because life insurance policy matured. Whose life insurance policy it is? Proprietor. But the amount kept in the business itself. So it is treated as capital. Next, he has withdrawn 2,000 rupees per month. Means 12 months now. So total 24,000 rupees is the drawings amount. So prepare statement of affairs as on 31st March 2021 and 31st March 2022. Simple, students, look at whatever the assets and liabilities information we have, with that prepare this statement of affairs like this. The important concept here is building. After depreciation, building we have to consider 97,500 and furniture also. Is it clear? So these are the closing capitals. That's it. Next one, look at illustration 4. Take figures given in illustration 4. Find out profit of Mr. X for the year ended 31st March 2022. Simple. What is the closing capital here? 4,40,000. 4,40,700 is the closing capital. Drawings during the year 24,000. So 464,700. Additional capital introduced 40,000. So 424,700 again. 424,700 plus opening capital, sorry, minus opening capital is 241,200. Minus opening capital 241,200. That's it. So if you can calculate, you get the amount. Look at here. 440,700, 40. 4 lakh. Fresh capital introduced. Okay. Drawings add 24. Total 424,700 minus 241,200. Difference is nothing but 1,83,500. Is it clear, students? Next one. Illustration 5. The income tax officer on assessing the income of Sri Moti, for this is important problem, students. So in this problem we have concept that we try to understand. The income tax officer on assessing the income of Sri Moti for the financial year 2021 and 21-22 feels that Sri Moti has not disclosed the full income. So here the income tax officer is asking you to prepare statement of affairs. They ask you to calculate profit or loss. How? Because the assessing officer felt that the income shown by Mr. Sri Modi is not disclosed fully. He gives you the following particulars of assets and liabilities of Sri Modi as on 1st April 2020 and 1st April 2022. Here, try to understand the time gap between these two dates. The time gap between these two dates are 2 years, students. 2 years. So what we have to do here, we have to prepare statement of affairs as on 1st April 2020, at the same time on 1st April 2022. So for 2 years, this statement of affairs is prepared. Do remember. Now, 1 for 2020, assets information, liabilities information. 1 for 2022, 2 years time gap. Do remember, assets information and liabilities information. Here, now all these assets and liabilities we present in a statement of affairs format. Now observe. During the 2 years, the domestic expenditure was 4,000 per month. During 2 years, 4,000 per month into 12. Total drawings are 48,000. Total drawings are 48,000. Is it clear, students? Next, the declared income of the financial year is 1,05,000 for 2020-21, 1,23,000 for 21-22. Tell me the total profit disclosed, 2,28,000. Total profit disclosed 2,28,000. Now what we do? We calculate profit again. If the calculated profit is less than 2,28,000, what is the situation? If the calculated profit is more than 2,28,000, then what is the situation? Yes or no, students? Yes. Now this is our calculation. State state whether the income tax officer's contention is correct. State whether the income tax officer's contention is correct. Means when the income tax officer's contention is correct, if the profit calculated by us is more than disclosed profit. I repeat, if the profit calculated by us by following statement of affairs method, that is more than 2,28,000, then the income tax officer's contention is correct. Yes or no, students? Yes. Now look at it. Explain by giving your workings. First, do calculate statement of affairs. So here they have calculated like this. Even if you want, you can calculate in a tabular format. It is vertical format. If you want, you can calculate tabular format. Look at 2020, 2022. Assets information, just observe total. Liabilities information. This is opening capital and this is closing capital, student. 3,13,000 opening capital, 5,65,000 closing capital. Now look at capital comparison. Closing capital 5,65,000, add drawings 96,000. 96,000. So here per annum 48,000 na. So for 2 years 96,000. 96,000. So difference amount 6,61,000. Deduct 3,13,000 rupees opening capital. Difference is 3,48,000, and this is the profit for 2 years. This is the profit for 2 years. But how much profit disclosed by Sri Moti to income tax department? 2,28,000 only. So the income tax officer's contention is correct. Here the income is suppressed. How much income suppressed? 348 original income minus 2,28,000 disclosed income. 1,20,000 rupees income is suppressed. Is it clear, students? Next one. Now conversion method. Under conversion method, what we have to do? Under conversion method, what we have to do? So here they have given a little bit procedure. Just a minute. I will show you the procedure here. Okay, fine. Now look at first what we have to do. They give you the incomplete information, student. They give you incomplete information, completely incomplete information. Okay. Now out of that information, incomplete information, we have to complete the information and we calculate profit or loss by preparing trading account, profit and loss account, and balance sheet. Observe here. First, draw the format of trading account. profit and loss account, and balance sheet. Draw the format of trading account, profit and loss account, and balance sheet. Along with these three, we also prepare working note. We also prepare working note. What is the working note? First one, debtor account. Second one, bills receivable account. Third one, creditors account. Fourth one, bills payable account. Fifth one, cash or bank account. Sixth one, if there is any need, then we prepare opening balance sheet. If there is any need, we also prepare opening balance sheet. So these many working notes you have to prepare, students. Trading account, profit and loss account, and balance sheet. Working notes compulsory, debtor account, bills receivable. If we have bills receivable, then we prepare bills receivable account. If we have bills payable, then we prepare bills payable account. Suppose if all cash balances, opening balance and closing balance of cash is given, then you need not to prepare any cash or bank account. Suppose if any opening balance of cash or closing balance of cash or bank amounts are missing, then we prepare cash or bank account. So solving problems on incomplete information problem are like solving some puzzle. Solving some puzzle, students. Do remember. These are very, very logical. So now here look at illustration 6. So illustration 6 is regarding debtor account, how to prepare debtor account and bills receivable account. Observe. Calculate bad debts. This type of problem earlier they have given students, September 2024 paper. Okay. Calculate bad debts from the following information. First, do remember one more thing. Here we are converting the incomplete information into complete information. Most of the transactions given, most of the information given in the problem might be recorded in two places. In two places. Do remember that. Suppose debtor opening balance is given. That is recorded first, debtor account debit side, opening balance sheet asset side. If opening capital is not given. And closing balance of debtors is given. That is written debtors account credit side, at the same time closing balance sheet asset side. So most of the information given in the problem is shown two times. Two times means in two places. To remember, because we are converting the incomplete information into complete information. Next one. See here, opening balance of debtors. Opening balance na two balance brought down 5 lakhs. Next one. Closing balance. Buy balance brought down carried down 3 lakhs. Sorry, 7 lakhs. Okay, here I will prepare just a minute. 5 lakhs is opening balance. Closing balance is 7 lakhs. Closing balance is 7 lakh. Next one. 6 lakhs is what? Amount received. Entry bank account debit to debtor account. So 6 lakhs rupees amount received. Discount allowed. Discount allowed entry. Discount allowed account debit to debtor account. So credit 10,000. Credit sales. Credit sales entry. Debtor account debit to sales account 11 lakh 40,000. Next one, bills receivable. Bills receivable entry, bills receivable account debit to debtor account. So 3 lakhs. Now they are asking bad debts. Normally, what is the entry for bad debts? Bad debts account debit to debtor account. So the difference in debtor's account is nothing but bad debts. So which side is more? Automatically debit side is more. So debit is more than credit. So the difference is nothing but bad debts. So you can observe here, students. Is it clear? Next one. Look at illustration 7. Calculate the credit purchases. What they are asking? Credit purchases from the below information. Simple. To calculate credit purchase in the problem also, to calculate credit purchase, it is better to prepare creditor account. It is better to prepare creditor account. See, opening balance, creditor account shows credit balance. Opening credit, closing balance, debit side 2 balance carried down. Payment made in cash entry, creditor account debit to bank. So debit side 8 lakh 50. Next one, discount received entry, creditor account debit to discount received account 20. Now Look at the balance: 8 lakh, 5 lakh, 13 lakh, 13 lakh 70,000 minus 4 lakhs. Difference is nothing but 9 lakh. The balancing figure in the creditor account, most of the cases will be credit purchases. Yes or no, students? Sorry, 9 lakh 70 kada. 9 lakh 70. Is it clear, students? So this type of simple calculation. Now whatever we have seen in illustration 6 and illustration 7, these are just part of the problem. These are just working note, students, working note. So these two may be part of the problem only. Is it clear? Next one. Now look at illustration 8. This is complete problem, students. Look at A. Adamji keeps his books on single entry basis. The analysis of the cash book for the year ended 31st March 2022 is given below. Observe. First, what is the requirement to look at? Prepare final accounts for the year ending 31st March 2022 after providing depreciation at 10% on machinery and furniture and 800 against doubtful debts. Very simple. First, draw trading account. Next one, profit and loss account. Next one, balance sheet. Irrespective of the information, it is better to prepare. If you don't have any opening capital, then you have to prepare opening balance sheet, sales account, see, debtors account, creditors account. Understood? Yes. Remaining working notes as and when they are important, then we prepare. Now look at. So one by one information observe and we take them to appropriate place. Observe here. This is the cash book, na summary of cash book. Opening balance sheet, asset. Received from sundry debtors, debtors account, credit. Debtors account, credit. Cash, sales. Trading account, credit side, buy, sales. Under that, cash sales. Next, capital brought during the year. Simply go to closing balance sheet. Write down capital. From that to that, add 6,000 rupees. Next one, interest on investment. P&L account, credit, because it is income, na. Next, payment to sundry creditors. Open sundry creditors account, debit side, to cash or bank, 35,000. Simple. Salaries are expense, P&L account debit straight away. General expenses, expense, P&L account debit. Rent and taxes, P&L account debit. Drawings, deduct from capital in the closing balance sheet. Cash purchases. So in the trading account debit side, to purchase, under that cash purchases. Next one, balance of cash at bank and in hand. These both are shown on the assets side of balance sheet. Closing balance sheet. Closing Closing balance sheet. Is it clear, students? Yes. Now look at additional information they are giving. Sundry debtor account opening balance, closing balance. Opening balance in opening balance sheet, at the same time closing balance in closing balance sheet. So simultaneously you have to write this information. Creditors opening balance sheet 5,800. Creditors account opening balance 5,800. Next one, creditors closing balance. So balance sheet liability side, creditor account closing balance to balance C by D. Next one, machinery also same. Opening balance sheet asset. Okay, closing balance sheet also asset. But at the time of writing 7,500, they said depreciation is 10%. So minus depreciation 750 is equal to 6,750 rupees. We have to show in the balance sheet, and this 750 rupees is shown on the debit side of P&L account. Next one, furniture. Opening balance sheet asset. Now, on furniture also we have 10% depreciation, 120. Remaining 1080 it is shown on the asset side of new balance sheet, and 120 rupees P&L account debit. Don't forget this. Important adjustment. Inventory. Trading opening balance sheet first, 5,700 closing balance sheet. Next, 3,900 trading account debit again because opening stock na. 5,700 trading account credit because closing stock. Next one, investments. Opening balance sheet asset 5,000, closing balance sheet asset. Clear, students? That's it. Over. And now we have 800 rupees doubtful debts. So this 800 rupees doubtful debts, P&L account debit 800, and in the balance sheet deduct from debtors. Here, look at. So here they have prepared sales account and a purchases account. Instead of that, here what you can write, buy sales, cash sales, credit sales. We need credit sales now. So how do you get credit sales information from debtors account? And here opening balance is written purchases. Purchases we have only cash purchases now. What about credit purchases? Credit purchases are identified from creditors account. Okay, closing inventory is there. Now trading account is completed. Get gross profit. This gross profit is transferred to the P&L account. So in the P&L account, all information is written. Here we get net profit, and this net profit is added to the capital. Here we don't have opening capital now. For that purpose, we have prepared opening balance sheet, and this opening capital is taken to the closing balance sheet asset side, sorry, liabilities side. Observe this problem. Is it clear, students? Now look at. They have also prepared capital account. Next one, sales account. By preparing sales account, what they have identified, credit sales, sorry, total sales. By preparing sales account, they have identified total sales. This is cash sales and this is credit sales. Credit sales are from debtors account. Look at debtors account. After that, purchase account. What amount we have identified by preparing purchases account? Total purchases. Total purchases means cash plus credit. Credit purchases are taken from creditors account. Just try to understand the logic. Now look at illustration 9. From the following data furnished by Mr. Manoj, you are required to prepare a trading and profit and loss account for the year ended 31st March 2022 and a balance sheet as at that date. All workings should form part of your answer. So for working notes, you will get some marks now. So that's why all workings should form part of your answer. Here also, what is the main requirement of the problem? Trading account, profit and loss account, balance sheet. That's it. Now look at. First, draw the formats. Trading account, profit and loss account, balance sheet. Remaining working notes as and when required, we prepare. Okay. Now observe here. Assets and liabilities information they are giving. As on 1st April 2021, 31st March 2022, closing. 1st April 2021, opening. 31st March 2022, closing. So, creditors, opening, closing. So, if they have given capital, identify capital. No, capital balance is not given. So, prepare opening balance sheet. So, opening balance sheet means first 15,770 is written creditor account opening balance credit side plus opening balance sheet liabilities side. Next one, closing creditors. Creditors account debit side closing balance and closing balance sheet liabilities side. Sundry expenses outstanding opening balance liabilities side closing balance liability side of closing balance sheet. Yes or no? So we have certain adjustment for this. Don't forget. Sundry assets 11,610, 12,040. Opening balance sheet 11,610, closing balance sheet 12,040. Inventory in trade. Opening balance sheet 8,040, closing balance sheet 11,120. At the same time, trading account debit side 8,040, trading account credit side 11,120. So almost every information we are taking to two places to remember. Next, cash in hand and at bank. Cash in hand and at bank 6,960. Opening balance sheet 8,880. Closing balance sheet. Now, trade debtors. Opening debtors not given, but closing debtors are given. So, first show this 17,870 closing balance sheet asset side and debtor account closing balance. So, here opening balance information missing means we have to calculate by preparing debtor account. Next, Details relating to transactions in the year. Details relating to transactions during the year. Observe. Cash and discount credited to debtors. Cash and discount credited to debtors 64,000 means go to debtors account, credit side observe 64,000 rupees. 64 they have bifurcated. The 64 they said cash and discount. Cash and discount. Observe. Sales return. Sales return entry. Sales returns account debit to debtors account. So debtor account balance decreases. Sales returns deduct from sales in the trading account. Next, bad debts. Bad debts entry. Bad debts account debit to debtors account. So debtors account credit side. Bad debts is liability. Transfer to P&L account. P&L account debit. Sales. Cash and credit both 71,810. So trading account credit side 71,810. And don't forget to deduct sales returns from sales. Next, discount allowed by trade creditors 700. This is discount received for us. What is the entry we record for discount received? So creditor account debit to discount received account. So creditor account debit side. And this is income gain now. So profit and loss account credit side. Purchase returns. Purchase returns are deducted from purchases. Additional capital paid into bank. Additional capital paid into bank. So closing balance sheet add to capital amount. Next, realizations from debtors paid into bank. Realizations from debtors paid into bank. We have paid 62,500 rupees into bank. So debtor account credit side by bank 62,500. Now, if you observe, yeah, cash and discount credited to debtors 64,000. Out of that, how much amount received from debtors bank? 62,500. Remaining amount is nothing but what? Discount allowed to debtors. And that discount is shown P&L account debit side. Observe students, that is important point here. Yeah. Okay, next one. Cash purchases 1030. So trading account debit under purchases, cash purchase, cash expense, P&L account debit, paid by check for machinery purchased. Paid by check for machinery purchased 430. So balance sheet asset machinery. Household expenses drawn from bank. It is nothing but drawings. Deduct from capital. Cash paid into bank 5,000. This is contra entry students. So the important aspect in this problem is we have to prepare summary of cash and bank account. Summary of cash and bank account. For that they are maintaining two columns. For that they are maintaining two columns. Observe. Combined cash and bank account. All balances, opening balance, closing balance, and all the receipts and payments. All the receipts and payments. Finally, the balancing figure. The balancing figure in cash and bank account we try to understand here. Okay. Here the balance of cash and bank account is nothing but they treat it as cash sales. Cash sales is the balancing figure. Next one. Cash drawn from bank. Cash drawn from bank. This is also contra entry. Cash in hand 31,000. Sorry, 31st March 2022, 1200 rupees. Okay, closing balance sheet, asset side. Checks issued to creditors 60,270. Creditor account debit side. Creditor account debit side. Now, this information we have to post in two places to remember students. While reading this each transaction, try to visualize entry and post accordingly. Clear? Now look at. So here a trading account is prepared, profit and loss account, balance sheet. Working note is very important for incomplete records problem. Okay, look at trade creditors. After that, trade creditors and creditors. Opening balance sheet because we don't have any opening capital. Next, outstanding expenses adjustment. outstanding expenses adjustment. Okay, this illustration 10 you can try to solve, students. Due to time constraint, I am unable to solve this problem. So we discuss next chapter NPO. Look at